Now, talking of earnings, some of the top US tech companies announced their quarterly results this week. While revenues of the tech biggies have increased, their profits have dropped and shares plunged as well. Amazon's second quarter report fell well short of Wall Street expectations. The company's earnings missed analyst forecasts by more than $1 a share. Its CEO, Jeff Bezos, briefly became the richest man in the world on Thursday when his net worth briefly rose above $90 billion. But its shares fell more than 2% this quarter. Google and Facebook both reported surging revenue growth in the second quarter due to their hold on the digital advertising market. Google commanded nearly 41% of the $83 billion internet advertising market in the US. Facebook, meanwhile, had 20% of the market share. Twitter, on the other hand, continues its dismal form. The company's revenue increased, but it lost $116 million in the second quarter of the year. Its shares also fell by 14%. Twitter has lost more than $2 billion in 10 years. For more on this, Rich Jaroslovsky joins me now from San Francisco. He's a technology columnist and vice president of the news website SmartNews. Rich, great to have you on Money Talks. Let's look at the earnings that we've been talking about, especially in the tech sector. Are we seeing a bubble but forming like the one we saw in 2000, and could it burst soon?
I'm not sure that we see a bubble forming, but what we do see is kind of an interesting stratification in these big four companies, where you have a couple of them absolutely killing it, and one or two of them missing. The most interesting one might be Amazon, which had a huge earnings miss. But while the stock is off, as you pointed out, it's not off a lot, which says to me that there's an area where you have a lot of belief as opposed to evidence fueling the enthusiasm about the stock.
Oh, I think you hit a key word there, belief. Do you think there's all too much of that floating around Silicon Valley these days when compared to the reality of what some of these companies are offering?
Well, the reality, when you look at the actual numbers, what you see is Facebook is absolutely crushing it. Google is crushing it, but not crushing it as much as a lot of investors want to see it crush it. Amazon is, the things that investors are focusing on with Amazon tend to be top-line growth, and there's a belief that eventually profits will follow that growth. But that's the same dynamic that has driven Amazon to its current incredible heights.
Rich, very quick question, if I may just jump in. Isn't the whole point of having a company that you make money, whatever other metrics that you follow to value a company, at the end of the day, it's got to make money, right?
You absolutely do. With Amazon, though, to me, it's a fascinating dynamic because the markets have never really held Amazon to that same standard. There's a belief that they can make profits and will make massive profits when they choose to. And as a result, Amazon gets forgiven a lot, whereas Twitter at this point, for example, gets forgiven nothing.
Rich Jaroslovsky, I'm afraid we are going to have to leave it there, but thank you ever so much for joining us on Money Talks there. Rich Jaroslovsky from SmartNews.